So here's your risk analysis that you need to make. And I'm not saying what the right answer is. I'm just presenting this to you so that you can do your risk analysis and try to decide what makes the most sense for you. The risk analysis is if you buy Verizon stock, uh, you have a very high probability of making $68. And you don't have to think anything more about it. You buy the stock, you hold on to it. Every quarter, they're going to pay you a dividend. And the chances of Verizon uh, going out of business or reducing that dividend is very low because remember, Verizon was qualified in my analysis, meaning that for every year for the last 17 years, they have increased their dividends per share. So what that means is that you have a very high probability of earning that $68.14, and you don't have to do anything about it. It'll just sit there and earn that money. You'll probably earn more if you set it up for automatic reinvestment. If however, you buy silver, well, you might be able to make 2 to 3 times more on your investment, or you might lose money. And you've got to be paying attention to what's happening with the silver market so that you can sell it when you get that higher value. And in the meantime, that silver is just sitting there in your hands. It's not collecting any interest. It's just sitting on your shelf or your safe or wherever you put your physical silver, waiting for you to sell it. So I thought that would be a really interesting kind of way of looking at the difference between should you buy into a stock or should you invest in your silver?